Look at this bearish divergence on the RSI, gigantic upside move. We got to 89 and we retested the highs, right? Retested the highs with no buying pressure. Buyers are giving up, right? There's more sellers than buyers. The sentiment is not turning bearish for the year. Sentiment is like, whoa, we're a little overheated here in the market, and different sectors, different industries are going to rotate. So I see iron and I see Oklo, and I'm like, there's probably other stocks showing that, but I'm seeing utilities rise, right? So there's a little rotation here. Just be careful. Just be careful. RSI divergence. We're going to go to breadth next. Mark your breath. So far, we got the VIX jumping. Okay. Mark this down. You got the VIX jumping to 20. I want to stay cautious. I don't want to rush in and say, oh, I'm going to buy anything, even though I did almost FOMO in one of these stocks that we might talk about later, if I remember. But VIX jumped to 20. I'm waiting for that move. I'm waiting for the move to 20. We have a lot of stuff. We have core inflation, Michigan consumer FOMC minutes tomorrow, Michigan consumer sentiment, stupid stuff that doesn't really matter in the long run, but in the short run, it makes the market very vulnerable because of how strong it is, right? Core inflation, is it going to rise? We haven't even got the expectations yet for inflation. Retail sales might be weak October 16th. So we get the Fed cut at the end of the month, and October seasonally has weakness. Keep that in mind. Wait for that VIX to run here. We got look at, two stocks, Oklo, iron. Now market breadth. Market breadth. Am I missing something? Here it is. This is the market breadth I want to look at. This is advanced decline in blue. Okay. I hope we can see that. Advanced decline on the daily chart. Can I make this bigger? Not really. The amount of stocks advancing versus declining versus the S&P. Okay. You make it visually appealing here. So you can see the clear divergence. The S&P 500 is in red. It's rising. Okay. It's rising. And this is on a daily moment. It's a line. It's not a, it's not actually the, it's not actually candlesticks. Let me see if I could no, I can't even do candlesticks right now. Well, but you have the amount of stocks advancing versus declining, more declining. We have more stocks declining in the past 4 or 5 days. We're at the beginning. This correction is going to come. We've seen it before, a decline in that advanced decline, and then stocks dump after a couple of days. I just think we're around the corner somewhere. October, if there was a spot, if I had to give it a percentage, I'm going to say there's a 70% chance we get a nasty 3%, maybe 4, maybe 5% correction, sometime in the next 3 weeks before we get that November, Santa Claus rally. Okay. So we got breadth weakening. Now it's not even just that breadth that's weakening. We also have, the amount of stocks advancing above their 200 daily moving average can't make a new high while the S&P is rising. Let's add the SPX on there. Okay, you see how the S&P is rising here. Change the colors, go red. S&P is rising, but look at the amount of stocks. They're not really making new highs. They're declining. So another signal, right? No man knows the day or the hour, but we have signs that now this could rip to all-time highs, but we have a lot of events to get past. We have a lot of event risk, in my view. Okay, so keeping an eye on that. Now let's go back. Bank of America sentiment. We're going to switch screens here. Let me go to your comments before we switch. Let's see. What up? Yes. Oh, what up? Yassine, I haven't seen you for a while. Hassan, how's it going? Haven't been. Got the guys from Tik Tok on there. I'm going to read your stuff. Let me switch screens real quick, and then I'm going to read your stuff. This is a live on YouTube. All right. So now we're going to flip over to our other sentiment, right? Our overheating sentiment indicators. And then I'm going to read your guys' stuff. Wish I had a partner. So this is our exposure index. This basically tells us, let me make that screen a little bigger here, flip it over. This tells us active fund managers who are, they get long, they're trading the market. And when they get to this 100 level, this level up here, there's usually a sell-off, right? Sell-off. Now, this one doesn't look similar. Like usually I'm like, hey, we're going to get a correction up here. Didn't happen. but we're going to get this in tomorrow. We're going to get this reading in. It's every Wednesday. It's the NAAIM exposure index. It's basically active fund manager positioning. And I think they're going to unposition. They've been crushing it. Everybody's been crushing it with small caps. And I think we're going to get a reset there, right? So how far does it go? Maybe not too far. I don't know. But they're very deeply positioned. And I think I could be wrong. Maybe it doesn't do that. That's what my guess is, though, right? Now, bullish bear sentiment. We're getting more bullish sentiment. It's climbing. And this is a counter indicator. Whenever you have very bearish, no, I'm sorry, I didn't even tell you what it is. In the blue is bearish sentiment. And you can see that's trickling down, but it's getting smaller, right? The value is smaller. And the bullish sentiment is getting bigger. Neutral's in the middle. Look at the yellow and just say up is bullish, down is bearish, right? So you had bearish, 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 bullish, bullish. Now, while we were bearish, the market was exploding. Now we're getting a little more bullish with some event risk, with some surprises possibly down the pipe. We might have some negative surprises down the pipe. So I'm just looking at now. We're not extreme. We're not at extremes where it's like, oh my gosh, we're gonna have a 10%. No, I'm looking to repositioning with the VIX jumping right back up to 20, somewhere around there. Maybe, I don't know. We'll see when we get there. The inflation report could be a scare, right? Let's flip over to that report really quick. Core inflation. You want to track this coming up pretty soon. All right. So we have the inflation report. Now let's look at everything. Countries. I don't want to see every country. Just want to see US. Let's go to impact number 2. Now I should have done this on TradingView because you can see it, but I'm so used to this one. Fed Bostic. You just have a bunch of Fed members speaking today. They were talking about inflation again, woeing the market. I think the market's sensitive. Just it's a little sensitive for a negative surprise. That's it. A little sensitive for a negative surprise. FOMC minutes tomorrow at 11 a.m. That's going to be 1 or 2 o'clock. 2 o'clock Eastern time, right? So we'll get the FOMC minutes. We'll see what they say. And that could be a negative event. If it's positive, I don't think the market really gets too crazy. Powell speaks on Thursday. Jobless claims, we'll see if they jump. Fed Goolsbee. Now we want rate cuts. The market's probably already pricing in rate cuts because of the government shutdown. So it's been very bullish. Remember, we talked about this. The market is pricing in rate cuts at the end of the year and into next year, just lower rates. It's basically more credit. The market is bullish in the long term because it's pricing in more easy money, period, right? Number 2, the biggest thing is technology solving issues. And we're going to talk about the biggest theme. Hopefully we get to it. Let me write it down really quick so I don't forget. Themes. Robotics. It's AI, robotics. It's going to be blockchain, okay, which is still coming in to the mix. There's one more. We'll keep it at that. I think robotics is next big thing, though. Okay, for markets other than the energy expansion stuff, right? So we have inflation risks, and then we go a little further into what's retail sales could be a risk if it falls too far. We're going to get a bigger rotation into utilities, into maybe healthcare. I don't even want to say healthcare right now. Utilities and consumer staples. That's who went up today, right? We'll see the housing market index that hasn't been doing so well. Rates are not falling the way that people expected. And here's the issue. If inflation comes out as a higher surprise, what are we going to see? We're going to see literally not the Fed cutting rates. We're going to see the mortgage rates, which are tied to the US 10-year, not really budge. And then guess what? People are locked out of a home. Weakness persists. Then we need we need some type of fiscal incentive for people to buy homes. So it can get tricky here. I'm still long, but I'm trimming some positions, waiting for that VIX to pump. I see a lot of risk here. Okay, we'll get off this.